Yeah, I'm losing my edge.
All right, Pete, let's get into it. Scalping with price action.
We're getting some of that today.
Last week. Yeah, some interesting price action, not some outside days necessarily.
No, not at all.
Some interesting price action that we will dissect here today. I talked about this with Mikey Goff last week, Pete, and it went pretty well. He had some great insights here. He's a numbers guy. I wanted to get your experience, though, into this concept because when everything is moving, like we saw last Thursday, and even actually throughout last week, not seeing so much here today, but that means it's a good opportunity for us to throw the magnifying glass on a day like last Thursday and figure out how we can better trade the next time this volatility comes around. How do you trade price action when everything's moving? And now, Pete, I want you to first kind of define what price action is, because it's one of these things that I think a lot of traders like to toss around and make people like almost feel bad that like, oh, well, I trade price action and you don't know what that is, so I'm smart. But at the end of the day, it's just analyzing a chart. It's analyzing historical data and where the markets are right now, right? Like what's if you were to say I'm trading, I'm looking at the price action in sticks and I'm looking for a trade opportunity, like what does that necessarily mean?
You know what? I'm looking for strategies that fit my particular strategy bucket. Not every strategy fits every trader. Traders find that certain strategies lend better to their style, their comfort level, their tolerance, and they're able to build discipline mechanics around that and then manage it effectively. So, and it's so funny. I just got off the phone with a buddy of mine who I stood in the yen pit with for 5 years. And he was one of the best. I was a contrarian trader. So I was always looking for extremes. When we talk about ranges to trade, looking for extremes to trade. He was a momentum trader. So the market would break out of a level. He'd buy a bunch more and continue to buy it until the momentum ran out. I mean, but and again, sometimes it works. Sometimes it didn't. Momentum trading now is very hard because markets are very efficient. They don't give you a run outside of a range. But price action is just back and forth. And I think we look at, and you take a look at, we've had a great run in treasuries. Last day and a half, though, you look at that little tiny line and in the lighter gray here, and you can see, is that price action? No. Is there back and forth? Absolutely. But price action to me means two things, that there's back and forth within, and my strategy is within extremes in a range, not momentum within the range, but also that it's tradable price action. It's like, now you're throwing another ambiguous term on me. What, price action. Okay. I get that back and forth. Tradable price action means there's got to be enough unique price points that I can get in and out of this range without having to pick the absolute bottom and the absolute top.
And the opposite side of the spectrum, Pete, would be the investor like, I mean, I don't mean to simplify this because this guy is, historically very smart and very good at what he does, but like a Warren Buffett who analyzes certain numbers, but at the end of the day, he's like, I want to buy a bunch of Coca-Cola stock. And he's not necessarily looking at a 15-minute bar chart of where Coca-Cola is to try to scalp that market. Like that's the alternative, which is like, or I've got buddies who are like, oh, I think that environmentally sustainable companies will outperform in the next couple months or couple of years. That has no regard to price action. Like price action is having those opinions on whether to buy or sell created for you through the movement of the actual prices. And it's a funny thing because this is why we are so product indifferent, Pete, is because, and this is your whole joke a lot of times with some of the best professional traders is like, they'll trade dirt if you can put a price on it, which is just to say that like, if there's a price on a market and I can analyze it and watch it move back and forth, then I've got, potential opportunities and strategies for anything. And this is where we start here. And this is the basis of almost, all your different technical analysis and indicators is just the standard deviation, letting you know that, okay, these stock markets here at the top move about 70 cents to $1. The yield markets move more around 50 cents. The metals market, that's the biggest performer here, moves almost $1.25. And then the US dollar is similar to those yields at around 50 cents. And from there, Pete, that's what kind of lets you know, it sits in the back of your mind when you're watching either charts or just net change numbers. It lets you know when a potential opportunity comes up.
Yeah, absolutely. And that's I'm glad you quantified that it's price action isn't uniform. And I don't know if you call this the heavier lift or not, but you can't attach, what's a good price action day? And you just highlighted there, the amount of price action that we need to trade is different in the tens than it is in spring. Yeah. But at the same time, given the information that we provide, we're not just looking at something and saying, I think we're using what the market provided us as that tradable range. That's what we always do. And I like the fact you hit on that in terms of back and forth and the quantifiable back and forth of what a tradable range is.
Yeah, and this is what we're talking about here. Like those numbers there we give them out to the small exchange subscribers every week, and they adjust slightly every week with every day that passes in trading. There's new data points, and that those standard deviations shift slightly. But after we figure out that, okay, the sticks, the small technology futures that have been moving around a lot, actually have become one of the more volatile markets to look at. If you're not looking at technology stocks, the sticks is a good one. NASDAQ obviously moving around a lot as well. But here, Pete, in this example, that number of 75 cents there just lets me know that on a day like Thursday, when technology stocks fall, they fell $1 in the morning, and you, being the contrarian, find a potential opportunity to get on the other side of that to buy into that fall. Your buddy who you were talking to today might actually sell into that. And what's really nice, we get back to this very often.
We've been all over that. Yeah.
Both the trend follower and the contrarian at the end of the day could be right in their own ways. And we'll get to mechanics here in a second. But this is how you apply these numbers, right? And I think this is good for people to see, because we talk about standard deviations, Pete, because you and I are around them so often. But the new trader, when you're looking at a 75-cent one standard deviation, $1.50 two standard deviation, a $2 three standard deviation, that's just saying that the market has a 68% chance of staying within 75 cents, 95% chance to stay within $1.50, and then within $2, that three standard deviation there, 99% chance. And so we use these numbers to gauge potential opportunity and compare these different levels to what's the actual price action we're seeing in the market.
Absolutely. And I like the fact that, so we always try to move the dial from, again, the binary outcome of static delta futures was a 50-50 bet. So we use statistics in terms of probabilities to move that. Doesn't change our mechanics, doesn't change our management. It just gives us better trade location, which moves that dial a little bit. But it's a two standard deviation move is an opportunity. It is not a guarantee. And I think I'm restating the obvious, but it doesn't make it less. I can be a little bit looser with my mechanics because I've got this edge. The edge is what we're taking advantage of. The success around the edge is the mechanics and the management. So I just, that is where we find that 55-45, that 60-40, and then we act on it. And with the right number of outcomes, we create a profitable strategy.
Well, and I'm glad that you bring up even the term loose mechanics there, which we'll get to here in a second, because you need both those metrics and the price action itself to create a good entry. Like everybody on the network and every trader talks about, when markets aren't moving, you have nothing to trade there. So yeah, you need the metrics, you need the price action there, but then the last thing you need is active exits. Like every time Pete buys into a market that's falling or sells into a market that's rallying outside those standard deviations that we just put in front of you, he's got a number in his mind like, all right, if this thing is $50 or $100 in my favor, I'm getting out. And same on the reverse. But what you see here on Thursday, Pete, you would have ended the day at a scratch if you managed this profit earlier in the day. And then when markets moved lower by that standard deviation again, you just let the market move against you and you didn't manage here. Whereas if you were active and instead of just trading twice on Thursday, you traded three times, Pete, you actually would have been profitable on the day, and you would have reduced your time in the trade and the time that you had to spend looking at this one single market. You could look at other markets and everything else. And this is just, a great example of using those standard deviations. Okay, it broke out here outside of one standard deviation to the downside. I bought it. It bounced. Good trade. It did it again. went against me. I got out for a loser. And at that point, I'm at a scratch. And that allows me to then get in when it falls another standard deviation lower, down to 3 standard deviations. And I can get in again. And then I end the day with a winning trade there, Pete. Active entries and exits paired with those scalping mechanics there, Pete, with the standard deviations or whatever your technical analysis is. That's how you create sustainable scalping trading.